Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So thank you for joining the session. And if you can hear me clearly, kindly type hi on the live comment section, and these will confirm that everything is working just fine. Awesome. So let's get started. There's quite a number of things that we will be covering today. This basically ranges from quite a number of things. One of these will basically be the progress of what's currently happening with the Israel-Hamas situation. We'll also be looking at the major news that happened yesterday, which is the US Producer Price Index, as well as the FOMC meeting minutes. Then we'll look at the major news for the day, which is the US CPI report, or basically the inflation report. So once we do these three, then we also look at the key market prices and try to determine the various market structures. And of course, if we happen to identify trading opportunities, then good for us. So hello, Juma. I can see Christopher in the house, Collins, Peter, there's Elizabeth and Tom. Thank you guys. Thank you for joining. I appreciate your feedback. So let's get things started. So I'll go right into the economic calendar. So let me share my screen. So from the economic calendar, you can see Monday was largely a quiet day with a lot of bank holidays. I believe this is when we had the last session. Then on Tuesday, we had a public holiday on Tuesday. So I took a break. I could not do the presentation. Wednesday, we did a very nice session with Norbert, where basically later in the day, we saw the core PPI data coming in higher than expected at 0.3%. And of course, monthly PPI data also came in higher than expected at 0.5%. So producer price index is a measure of producer goods prices, and it tends to reflect in consumer prices later on. So when you track the prices of producer goods, you know that these goods will eventually reach the consumer, which basically means it's a measure of forward prices, which indicates that there is a high likelihood that there will be higher prices within the US in the next 1 month, 2 months, or even 3 months from now. So this basically means that inflation is still a big problem after having jumped twice over the last 2 months. So we could potentially see another jump for September, and that will be quite worrying, especially for the Fed members. So later on, we had the FOMC meeting minutes, which basically showed that the FOMC members are currently divided. Some of them are advocating for one more rate hike, but then all of them agree that rates need to stay significantly high for a longer period of time until inflation drops back to the 2% target. So it's more of a hawkish sentiment across board, where all the members are expecting rates to stay high overall for a longer period of time, while more and more members are advocating for another rate hike before the end of the year, which would basically mean US interest rates now move to 5.75%. So with this hawkishness of the Fed, it basically implies that we could be seeing some stronger dollar as we approach the end of the year. And that may have quite a number of ramifications on major currency pairs, as well as the way we trade gold and equities. So today, we have already seen quite a number of data announcements. I think one of the major ones is Japan, where we saw the bank lending slow down to 2.9%. Core machinery orders dropped by negative 0.5%. Producer price index slowed down to 2.0% from a previous reading of 3.3, and of course an expectation of 2.4, meaning that inflation is cooling down in Japan, especially when you compare with what's currently happening in the US. Then we had GDP data coming for the UK, which came in as expected at 0.2%, which is good performance compared to the previous contraction of negative 0.6% in August. So construction output in the UK slowed down by negative 0.5%. Goods trade balance worsened to negative 16.0 billion pounds. Index of services remained the same as expected at positive 0.1%, an improvement from the previous drop of negative 0.1%. Manufacturing production took a hit of negative 0.7% in September, which was worse than expected. Manufacturing production also was a slight improvement from 1.2% from MPC member PIL. Then we'll be looking at the new loans data from China as well as M2 money supply year over year. Then we will be getting the ECB policy meeting accounts, or basically meeting minutes. Then the most important news for the day will be the core CPI and the CPI month over month, as well as CPI year over year for the US, which is basically the inflation report. So every trader is majorly focused on the inflation number, which has a significant impact in the markets. Over the year, this has been the one data point that has caused the most volatility in the market. So whenever we see this number, investors tend to react strongly. So in the previous reading, inflation increased by 0.6%, which basically led to a jump to 3.7% on the year from the previous reading of 3.2%. So now we're expecting inflation to cool down somewhat to 0.3%. That is for the month of September, and this is expected to drop the overall number to 3.6%. And investors are really focused on this number. So as for core CPI, it increased to 4.1% on the year, but then on the month it was 0.3%. So we expect another 0.3% reading for September. And if this is higher than expected, then we could be seeing investors betting on another rate hike on the next Fed meeting. So we also be looking at the unemployment claims, which is a weekly data point, and is expected to increase to 211K compared to the previous reading of 207K. So in this case, the unemployment claims report is expected to have minimal impact in the markets compared to the CPI report. However, if both data points coincide in the same direction, then in that case, we could be seeing a much bigger movement in US dollar pairs, as well as equities. And of course, we could be seeing some high volatility in gold, as well as US oil, or what you call the WTI. So as we approach the end of the week, later on, we'll be seeing natural gas storage for the US, as well as crude oil inventories at 6 p.m. Then tomorrow, you look at the CPI data, as well as PPI data from China, a speech from Bank of England Governor Bailey, and of course, another speech from ECB President Lagarde, FOMC member Harker, then preliminary University of Michigan Consumer Sentiment Survey, before we look at two more speeches from Bank of England Governor Bailey and ECB President Lagarde at 6 p.m. on Saturday. So knowing what we know, there's also more things to consider. One of them, I will be looking at the biggest news on the tech sector. So there's a new way of basically hacking major tech institutions. So internet companies report the biggest ever denial of service operation. They are basically called DDoS attacks. So this has been affecting Cloudflare, Google, as well as Alphabet. Alphabet is the mother company that basically owns Google. So internet companies, Google, Amazon, Cloudflare, say they have weathered the internet's largest known denial of service attack and are sounding the alarm over a new technique they want could easily cause widespread disruption. So Alphabet-owned Google said that its cloud services had parried an avalanche of rogue traffic more than 7 times the size of previous record-breaking attack noted last year. So there's also speculation that the banking communication system in Japan has also been witnessing these attacks. And for the last couple of days, I think it's since Monday, the top 5 banks have not been able to settle transactions as a result of the alleged hacks. So it's becoming quite a concerning issue. And of course, you wouldn't expect the Bank of Japan to come out publicly and say that their most important financial system has been hacked. So they're only saying that it's hitches in their system, but nobody is really going outside and saying what's really causing the disruptions. So besides this, the inflation report is quite important today. So this has been the path. So since the bottom that we saw in 2020 of 0.3%, inflation went up and topped at 9.1%. Then for one whole year, kept going down. And then in the last 2 readings, we moved from 3% to 3.2% and then 3.7%. So we will be looking to see if this upward trajectory continues for US inflation. So another key thing is the developments that are currently happening in Israel. So I recently did a thread, this was on Monday, trying to understand how this may affect the markets. So I'll be sharing a link with you guys so that you can check it out on your own free time. So one of the most recent developments, and I've been updating the thread over time, is that there are more and more countries taking sides. For instance, Jordan basically announced that they are supporting the Palestine and they want a peace agreement between the 2 countries to be started. Then the most recent one that I saw early this morning was that Qatar has threatened to stop supplying gas to the West if the bombing of the Gaza Strip does not stop. So with such threats, then you can obviously see the impact on the markets. So if at some point Qatar was to stop supplying gas to the West, then it would mean a shortage of supply, and this would be very bullish for natural gas prices. So in this case, when you see such developments, then you start thinking of where the opportunity for you as a trader may lie, and basically take advantage of that. So there's quite a number of developments that have happened. Congress officials loaded up on defense stocks 2 weeks ago. So if no one knew this was coming, then how did Congress know, and so on. So there are so many developments that are happening every day. I keep updating them on the thread. So if you just follow the thread, then you'll be getting some of my own analysis and research, identifying some key angles that the market may be impacted from the war. So at this point, I think it's important that we look at the charts and try to understand what's happening. So after getting an 11-week rally in the US dollar index, now we are on course for the first week where we are seeing the dollar index making a sell-off. So today being Thursday, this is the 4th day in the week. So the market opened here, went up, closed lower, then even lower on Tuesday, almost at the same price on Wednesday, and today being Thursday, you can see how it's performing. So this is basically leading to the potential that the dollar could continue weakening. But then from what we saw in the Fed meeting minutes yesterday, there's a high likelihood that the dollar will continue to strengthen for as long as the Fed remains uptight with its policy of holding rates higher for longer. So as long as we keep following the policy of higher for longer, it basically makes the US treasuries attractive for investors worldwide. And this creates demand for these bonds and basically reduces the supply of dollars in the market, thereby continuing to strengthen the dollar. So we could be seeing the dollar rebounding as we approach the end of the week. And one of the key causes that would lead to a rally in the dollar would be a higher than expected inflation rate. So if we happen to see a higher than expected inflation rate, which would basically pressure the Fed to hike interest rates on its next meeting, then that would eventually lead to a very strong bounce here. So we can already witness this following the price action of yesterday. The dollar index went down and then bounced. And then today, the bottom seems to be the same, basically imply that the market is unable to form lower lows, which is a signal of a weakening trend and may lead to a strong jump towards the upper side. So Looking at the pound USD, we have had quite a significant rally. But then also, if you look at yesterday's high compared with today's high, then you notice that the market was unable to form a higher high, which may signal that the market is about to make a U-turn back downwards. So from the forward chart, this is how it looks like. So it's a market that literally broke this trend line, rallied all the way up, but now upon getting to this level, it's seemingly having some challenges forming higher highs. So we could be seeing the market making a turn here. As for USDN, you can see the struggle that the market is attempting to move higher, but still facing some significant challenges here. So I'll be trying to show you the area because I believe ever since the Bank of Japan attempted to support its currency, all we have been seeing in this market is sideways momentum. So what we have been seeing here is the market trading within this range, this being the upper side and this being the lower side, and the market is currently attempting to break this side here. So as we wait for the CPI report, I expect the Bank of Japan not to have done anything. So I expect the market to remain around 149.3. And then from here, we'll be making a decision of whether the dollar continues to rally against the yen or whether it moves back downwards. So this literally depends on how the report will be. So a weaker than expected inflation would likely weaken the dollar because it would not pressure the Fed to go for another rate hike. So the Euro USD is currently trading at a very important price level, which was acting as a resistance. It was the resistance on Tuesday, Wednesday, and today on Thursday. The market has broken and retested this particular trend line, and now it's ripe for another sell-off. So we could be seeing the US dollar strengthening against the euro, and this would lead to another leg back downwards. So we are currently at a very important and interesting price point. So all you have to do is to wait for the trigger movement, and if it indicates that we are going back downwards, then you execute your trades and take advantage of the momentum. So on the other hand, a weaker than expected inflation rate would probably lead to a rally. So you have to be observant of some of these levels. So in this case, weaker than expected inflation would lead to a rally to 1.06840 for Euro USD. But then personally, I think there's a higher likelihood that we go back downwards. So for USD CAD, I think this market has been trading in a range for 2 consecutive days. So if you just monitor the range, then you identify the extreme price levels, then you could be able to take advantage of a breakout if it happens, especially after the announcement of the CPI report. So as for gold, we have seen a very strong and impressive recovery after the market traded sideways for a while last week. So it kept trading sideways for 4 straight days before it broke towards the upper side on Friday. So on Monday, we opened with a gap. The market traded sideways for a while. Then it managed to break towards the upper side. So this was a sideways momentum, attempted to go down, found support here and rallied, traded sideways on Tuesday, and then on Wednesday, continued moving higher. And then today being Thursday, we are seeing this continuation being pretty strong as gold manages to retest this previous low, which is now a potential resistance at 1884. So as we approach the afternoon, I think this will be a key decision point at 1884. So further weakness in the dollar could lead to a rate to 1901. But then if we happen to see a much stronger dollar, then gold could retest the low of the week, which is around 1845. So for AUD/USD, a very strong recovery here. But from the price action here, you can already see that the market is unable to form a higher high. So notice this high followed by this high, they kept getting higher up until yesterday. Then after the price action yesterday, what we are seeing today is a market that was unable to go for another higher high, which indicates a weakness in the trend. So on the other side, we have a neckline somewhere around this area here, 0.63884. So we will be monitoring this horizontal line versus this trend line that is declining, see a potential for a breakout on AUD/USD. So US equities have been on a strong rally And this has been quite a surprise in the markets. But then we know that there is a trend line that we have been following for a while now. And this trend line has basically helped us identify potential entry opportunities for short selling positions because the market is forming lower highs each time. So in this case, the market is currently retesting this area, and there is that potential that the market could get into a huge sell-off to drive us back to the previous low. In this case, with high interest rate environment in the US, there's no reason to bet on a stock market rally, especially after the AI boom seems to be cooling down. So there is a good likelihood we could be seeing the market prices moving further back downwards and retesting 14,439 for the NASDAQ. So as for the US 500, which is the S&P 500, we are still far off the upper trend line. So this upper trend line is far off, basically implying that the NASDAQ is the strongest, which has been able to rally to this trend line, but this one seems a little bit weaker. And now we could be seeing some correlation on the same. So in this case, if the NASDAQ is the one leading the market, then the S&P 500 could also be selling from these areas. So the US 30, I think, is the weakest, hasn't been able to retrace and get back to the previous trend line. So we have been seeing this theme across board, the market forming consistently low highs. And now with this rally, we could be seeing the Dow Jones rally to 34,152. But then from this area, we could be seeing the sell-off starting to happen. So it's also important to notice that the market is currently testing a very significant resistance point. And for the last 3 days, it has been unable to break here. So the potential for the market reversing at this point is also significantly high, and we could be seeing some further sell-off happening here. So as for UK oil, we saw this flag formation happening early in the week. Then yesterday, the market managed to break towards the lower side and drop all the way down before pulling back. And now, today, the market has already retested yesterday's low. And from then, all we are seeing is bullish momentum. So remember, whenever there's a conflict in the Middle East, it tends to disrupt the oil supply and basically leads to higher prices. So in this case, there's a high likelihood we could be seeing the market moving even higher, and the potential for the market retesting yesterday's high, which was almost the same high on Tuesday, as well as the high on Monday afternoon, not in the morning, would also be retested at $87.477 per barrel. So most successful analysis is where we identified the bottom for the French 40 index. I remember talking about this on Monday as well as last week. So the market has been really struggling around this area here. And then eventually we saw a big jump here, followed by a pullback. And then from Monday, Tuesday, Wednesday, Thursday, we have been seeing a nice rally. And I expect this to continue for the French 40 index. Then for the Euro 50 index, it's also the same. We identified this area as a potential bottom. The market pulled back here on Monday, then continued to rally for the rest of the week. So I expect the bullish momentum to continue since this is a major swing point for the two indices. So it was a swing bottom here for the Euro 50, swing bottom for the French 40, and of course for the UK 100. This is something similar we are seeing. Market managed to swing from this area, and all we are seeing is bullish momentum. So I expect even the UK FTSE 100 to continue to rally and at least get to 7,720. So for BTC USD, we are seeing a big sell-off currently happening, which basically prepares us for a potential bull run. So in this case, the more downside price we keep on seeing, the better the potential opportunity for a buy position. Then for the USD CNH, we had a big jump downwards, which was supported immediately. A further drop, which went back to retest the trend line. And clearly, this trend line has been very important for this pair. And every time the market has gone back up to this area, you can see the CNY strengthening and pushing further back downwards. However, from the analysis for these couple of days, what we can identify is a clear level acting as the resistance here, and also another clear level acting as support. So if you trade the USD-CNY, then you can identify that this is a market formation. And every time the market bounces from this area, goes all the way up to the upper trend line, then back down, and you can easily identify these technical points. So in this case, if the market was to get to this area again, you look for a bounce or a potential break. And of course, this will be an important area. So following yesterday's high and today's performance, I would say that the market is no longer able to form higher highs. And this high is being respected as a very strong resistance point. So in this case, if the market gets in the zone, it might present a nice trading opportunity. So that's it for the day. So I'll be checking if you guys have any questions. The UK oil and US oil charts and candlesticks look exactly the same. Why is this the case? There is usually a very strong correlation between the two assets. And the only difference is usually the price. So you'll see a $3 to $4 difference in price between the two assets. But then the markets tend to be like 98, 99% correlated. So when we have, let's say, supply or demand issues in the markets, they affect both markets the same way. So we see a very strong correlation. So I'm doing fine JSCode. In my opinion, Israel just want to annex lands in that volatile stripe. My thinking is that they knew they would be attacked, use that as a pretext to annex the contested lands. What is your take? I've been saying this for a while. The traders or trading in the financial markets is amoral. So we basically do not participate in what happens in the world. And one fact that we always know is that good things will happen in the world and also bad things will happen in the world. So we don't cause them, we don't speculate on them, we don't partake, we only react to what we see. So when something happens, that's when we react. That's why I try to avoid taking a side. I've always been with the people who are being affected. Hustlers like me and you who are basically working hard to earn a living. They are currently being affected because their governments are making decisions on behalf of them. And those are the people I support. So in this case, I don't speculate on whether Israel or Hamas or Palestine or what they are intending to do. I only try to understand how this impacts the market and how you can react to it to make something for yourself. And in this case, from my analysis, there is a potential disruption of gas as well as crude oil supply, and that should be very bullish for US oil traders, UK oil traders, as well as natural gas traders. So in this case, we basically focus on how the markets may be impacted and get to make something for ourselves. A lot of shots. Good work, Rufus. Continue impacting upcoming traders with your analysis. Thank you. This is much appreciated. So as we approach the end of the presentation, make sure to focus in the markets, especially at the announcement of the CPI, which will be happening at 3:30 p.m. So make sure that you've prepared your positions well. And of course, if you're already in the markets, sometimes it makes more sense to exit. If you have some winning trades, just get out. If you have some losing trades, you might have to make a decision whether to tighten your stop loss or get out of the market and only get back when the volatility is reasonable after the announcement of the news. So key summary is that if we happen to see a stronger than expected CPI inflation, then we expect the dollar to rally. If it's weaker than expected CPI inflation, then in this case, we could be expecting the dollar to weaken, but then the weakening of the dollar may not last for long because interest rates are still high, so the dollar could still recover, especially if inflation is slowing down. We could be seeing the dollar weakening and then later on reversing course. So that's it for the day. Thank you very much, guys, and I hope to see you on the next session.